Hey family, in this video, we are going to go over how to properly fill out the 2025 Form W4-P. Now, this form is to let the custodian of your pension or annuity know how much money you need to have withheld every time you receive a payment. Otherwise, you may end up with a tax bill that you can't pay at the end of the year. Okay? So in this example, we are going to look at a single taxpayer. And we have Miss Sophia Petrillo here with us. Now, if you know who Sophia is, 100,000 bonus points for you. Let me know in the comments where you know her from. For step one, we want to make sure that we have the first name, middle initial, and last name the exact way that it shows up on the Social Security card. Okay. So we don't have a middle initial for Sophia. So we have Sophia, Petrillo, and then the Social Security number. Next, we want to make sure that we have the most up-to-date address for you as well. The reason for this is that at the end of the calendar year, the custodian of this annuity or this pension is going to be sending you a tax document called a 1099-R, and it will report all of the payments that you received from this pension or annuity throughout the year. All right. So for Sophia, that's 6151 Richmond Street. She's in Miami, Florida, zip code 33127. Okay. And then we mark the box for single. Now, if you want a precise number and not a guesstimate, you can use the IRS tool at www.irs.gov/W4-app. I don't know why I said gov weird. Excuse me. But anyway, if you Google the form W4P, you can actually click on it right here and it'll take you right to that estimator. Okay? So let's get down to step two. You are only going to fill out step two if you have income from another job or if you have another pension. Okay? And that is for my single taxpayers. Otherwise, you can skip step two. For step three, you only fill this out if you have dependents that you can claim on your tax return or somebody that is going to qualify for the foreign tax credit, which could be you, right? If you have a nice stock portfolio with investments in um, foreign companies, you get those dividends and you've paid foreign taxes, you may be eligible for the foreign tax credit. But if you're eligible for that, the education tax credit, maybe you were going to be getting the credit for the electric vehicle, clean vehicle this year, you would account for that right here. Okay, and what you believe that will be. You would then total those and put them on line three here. Okay. Step four is optional, but you would fill this out, and this is a part a lot of people miss. If you have other income that is taxable but doesn't have any money withheld, this is going to be things like your Social Security if you receive it, dividend payments if you receive them, or interest income if you have interest that you receive from savings accounts or other investments, okay? Maybe you have rental properties, okay? So you want to account for that here on line 4A. Now, if you itemize your deductions, which means you pay mortgage interest, maybe you pay state, local, real estate taxes, you would want to account for that amount here. But please note, it only makes sense to account for them here if they end up being more than what the standard deduction would be. So let's take a look at that really quick, okay? Here is the deduction worksheet. If you're a single taxpayer for 2025, so this tax year, when you go to file your taxes in the spring of 2026, your standard deduction will be $15,000. Now, if you were 65 or older, you get an additional $2,000. So your standard deduction will be $17,000. So right off the top, your first $17,000 the IRS is not going to tax when filling out your tax return. If we go back up here, remember I said only account for those deductions if they are more than the standard deduction. So if your mortgage interest, your charitable giving, all of those things are less than $15,000, you do not want to fill this out. For my taxpayers who are 65 and older, remember you get that additional $2,000 if you're single. You do not want to fill this out right here, 4B, if your itemized deductions, I'm sorry, are less than 17,000, okay? And last but not least, 4C is if you want an additional amount withheld that isn't factored in above. So let's go up here and look at what this would be for Sophia, okay? So we already got step one filled out. We're good. Got the box checked as single. Awesome. When we get to step two, let's say, for example, that Sophia also has a job. So if we look here, it says if you, and we're going to skip the spouse part, right? Because we know she's single. If you have one or more jobs, then you want to enter the total taxable annual pay from all jobs plus any income on Form W4 Step 4A. Then you want to make sure with that you subtract the deductions that were entered on Form W4 Step B for the jobs. Now, if you're not a tax person like me, that was a mouthful. What it's asking is whatever you're going to make from your other job, you want to take that amount and put it right here. Now, similar to 4A on this form, on the Form W4, it asks the same information, okay? It asks about deductions, it asks about other income that doesn't have taxes withheld. If you already accounted for it on the W4 for the job, you don't have to account for it here again. That's why it's letting you know this formula here. Okay, so we would make sure that if we're going to include it here, we also back it out so the IRS knows, I'm sorry, so HR knows how much to withhold. Okay, so let's say Sophia picked up a job. All right, so in addition to the pension that she has, she's also going to be making $10,000 from a job. Okay, the next line is asking if Sophia has another pension that she's receiving. In this situation, Sophia does not. So we are going to put 0. When we add this, we end up with $10,000. Okay. So with this, I also want to point out this tip. Things have changed so much since the Tax Cut and Job Act was passed in 2017 under the Trump administration. It went into effect in 2018, right? So we saw our 2018 taxes filed in 2019. That was the first year for people to get used to it. And then we all know what happened in 2020. COVID. So a lot of people aren't noticing the changes until now just because we've had some crazy tax years. So this tip here lets you know To be accurate, submit a new Form W4-P for all other pensions and annuities if you haven't updated your withholding since 2021. Or if this is a new pension annuity that pays less than the others. Submit a new Form W-4 for your job or jobs if you have not updated your withholding since 2019. Okay, so a lot of people were surprised this tax season by how much wasn't withheld, but the reason for that is because they don't have updated withholding forms. So just wanted to point that tip out to you. Okay, so step two, we have that job accounted for. And the reason we want to do that is because $10,000 is less than that $15,000 standard deduction, which means Sophia's job is not going to withhold anything at all unless she opts into them to withhold extra. Because, again, remember, if Sophia is under the age of 65, that first $15,000 is not going to have any taxes withheld because the W-2 job doesn't know about the pension and vice versa. That's why we have to add it here to make sure that it's all accounted for. Because on the tax return, we'll have to report the full 40,000, right? So going down to three. Now, Sophia probably would tell you that she can claim her daughter, but there are rules for claiming dependents, which I'm not going to go over here. For the sake of this example, let's say that Sophia does not have a dependent and she does not qualify for a credit in this year. Now, if, let's say, Sophia did have children under the age of 17, she would multiply the number of children that she had under 17 by 2,000 and put that number here. If she had a dependent that was over the age of 16, we would multiply the number of those dependents by 500 and put this here. And again, this would be if her total income was under 200,000, okay? And then if she had any credits that she was anticipating being able to take during 2025, we would account for them here. So let's say, for example, that Sophia is thinking she's going to get half of the clean vehicle credit for a new vehicle. Okay. So we'd put that 3,500 and then we'd also place this here. Now, when we have additional income added here, that is going to cause this to withhold higher. But down here in step three, when we add a credit zeroes out your tax liability dollar for dollar. So if we let this withholding form know that we are going to be receiving a credit, that means that less will be withheld, okay? Because it's already factoring in that you have this 3,500 to help zero out your credit, all right? Now, I shouldn't say zero out because it may not zero it out completely, but to help reduce your tax liability, okay? Now, continuing on, for most people, not all, but for most people who are receiving a pension, they still are receiving Social Security as well. It may not be a lot. It may be significantly less than the pension, but you want to make sure that you still account for the Social Security, and that would happen here on 4A. Now, there's a whole thing with provisional income, which can cause your Social Security to become taxable. More, the majority of it, okay? 85%. Now, with that, Social Security doesn't automatically have any taxes withheld. Just like I mentioned with the job at the 10,000. So that's why you want to make sure you would put the amount of Social Security here so that you can have the extra money withheld from your pension. If you wanted to have it withheld from your Social Security instead, you can fill out a form W4V, right? and submit that to the Social Security office. I do have a video walking through that process and I'll link it below in the comments, okay? Otherwise, if you have dividends, the rental income, what have you, you can also put that in here if you aren't making quarterly estimated payments, just so it will already be taken out of the pension. So let's say that Sophia is receiving $500 a month in Social Security. So we put 6,000 here, and we know that about 85% of that is now going to be taxable because the majority of her income is not from Social Security. But by her putting it here, now we'll have the proper withholding from her pension to cover the other income that she has. She doesn't have deductions that are more than her standard deductions. So for Sophia it would be the 17,000 because she's over 65 and we don't want any extra withholding. So for her, she would be able to sign this, date it, and turn it in to the custodian of her pension. Okay? Now, if these things don't apply to you, so you don't receive Social Security yet, you can put zero. If you can't claim any type of credit, you would want line three to be zero. If you have another pension and not a job, you would put zero here. And the lower paying pension here. So right now, in this example, Sophia's pension is $30,000. Let's say she has a second one that's 15,000, right? The one that's 15,000 likely isn't going to withhold anything automatically just because that is under the amount of her standard deductions. So, with that being said, we're going to account for it here, okay? Once this is signed, dated, and turned in, you should be good to go. Now, if it's a little bit later in the year, there may be some adjusting that needs to happen. If you were like, this video is really helpful, I still don't want to do it myself though, doing these calculations for you and then reviewing them with you is a service that my firm, Bowen's Tax Solutions, does offer. And I'm going to leave a link in the comment section. Actually, no, I'll leave it in the description so that you can book a call to have us do these calculations for you and to review them with you before you turn them in to the custodian of your account. If you have any questions, please let me know in the comments, and I will see you all in the next video. Bye now.